You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
It's time for Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Russell Investments, home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to the Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, you guys know what that music means. It's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo, beaming to you live from the Options, indeed the Volatility capital of the world, sunny and scenic Chicago, Illinois, beaming in from the Options Insider Studios, where we record all sorts of fine programs in addition to Volatility Views. And where can you find all of that online audio goodness? Well, of course, the best place is indeed our website, our main content portal, theoptionsinsider.com. While you're there, click on the Insider Radio Network tab, and it's all there for you in a beautiful overlay for your downloading and streaming pleasure. If you like to go elsewhere, we're available pretty much anywhere you find your shows: iTunes, TuneIn, Stitcher, Aha Mobile, etc., etc. Speaking of external sources for a second, a few of you have written in, saying, hey, are you on the new news app for iOS 9? And we're not yet, but working on it. Hopefully we'll be up there soon. And then you can add us to your news sources like anything else and get our stuff directly on your iPad or iPhone or however you like to use. It's a cool new thing they built into iOS 9, and we're going to make sure we're on it forthwith. And of course, while you're waiting for that, you can still grab our mobile app and get all the radio you want, at least, if not the web content, available there: iOS, Android, Fire OS, pretty much anywhere you find your apps, we are there. And joining me on the old Volatility Views program today, he is my volatility compatriot / comrade / nemesis, the greasy meatball himself, Mr. Mark Sebastian. Mark, welcome back to the Volatility Views program. Are you ready to view some volatility, sir?
Good to be here, Mark. It's another exciting day. The S&P 500 has been off to the races, then on-off to the races, and now appears to be back off to the races. And, vol getting a bit of a smush, although John Boehner taking the wind out of that. I'm excited for this afternoon. I'm going to go to the Cubs game, then I'm going to Great America, which is going to be awesome.
Funny, we were thinking about hitting Great America this weekend as well. Maybe get some of the spooks, the Fright Fest in. You're right, but we'll get to the rest of that. Listeners don't need to hear our weekend plans, as fun as they may be, as we segue right into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. You know what this segment is all about. This is the portion of the show where we break down what the week was like from a volatility trading and analysis and product and research and pretty much every other volatility perspective you can think of. Domestic, equity, maybe some commodities, international. Throw it all in, mix it all up. you got the volatility review. And Mark, as you mentioned, a bit of an interesting one. I like what you said. Would you say the VIX, or excuse me, the S&P was unrallying? I like that. We're in unrallying.
Yeah, it was off to the races, then unoff to the races.
Unoff to the races. That's what you said. Technical terms only here on the program, listeners. But you're right. A little bit of interesting stuff cooking. We are, of course, recording this on Friday, September 25th, for all of you out there playing the home game. And you're right, Mark. It seemed like there might be a little bit of a vol sell-off coming in. We are hovering right around the nearly 22 handle in VIX cash right now. Some of that coming back as a result, like you said, of the somewhat surprise resignation here in the States of our Speaker of the House, of course, a very important position in our government. They don't normally just step down willy-nilly. So some people speculating that perhaps something else is about to break there, a news story, development, something else like that. This kind of doesn't remind me so much. I don't know if you were in trading out there on the floor yet then, Mark, when Treasury Secretary Rubin resigned, and it was a massive panic. And all of a sudden, surprise, surprise, about 2 minutes or 3 minutes or so before it hit the tape and the SPOOs started selling off, guess what happened out in the S? Of course, every phone lit up, and everyone, surprise, surprise, wanted every put you could possibly sell, and they were paying through your offer to get them. And it's one of those things. I was pretty new at the time in the pit, and it's one of those things that kind of seemed a little odd to me. And so I kind of held my hand back, whereas everyone else around me was flooding to sell everything they possibly could, because I don't blame them. It was very attractive. And that wee bit of maybe this isn't right saved us, because it ended up all those puts. Of course, you immediately missed your SPOOs because it was off about 20 handles a minute or so later. And it turned out to be a very costly lesson for all involved. So I guess moral of the story, when every phone lights up with one direction, get the hell out of the way. This not perhaps as unidirectional as that, but still a little bit odd to see something like this happening. And of course, on the heels of Miss Yellen yesterday, still saying, hey, we're still here, still pay attention to us. The vol still lingering. I'm assuming that doesn't come as much of a surprise to you today, Mr. Sebastian.
Yeah, I mean, I think you and I were talking about we needed some decisive words either way out of the Federal Reserve, and I think Yellen learned her lesson, because she finally said something and said, here's really what I think, and that was important. I'm glad she finally opened her mouth and took a position and didn't go all willy-nilly. And which is what everybody had been doing the last week.
Yeah, that pretty much describes the entirety of the Fed for the past 2 or 3 months. I think willy-nilly is about the most apt description I've heard of their policy, or perhaps lack thereof, lack of decisiveness, lack of all the things you may expect out of a body like the Fed. Yeah, so far not the perhaps most inspiring start to Miss Yellen's tenure. We'll see. There's a lot more to go, of course. It could unfold very differently, but for now, I don't think too many fans in her camp at the moment. That could indeed change at a heartbeat. Of course, it was indeed an interesting week. Like we said, we were kind of speculating last week. We were kind of on the heels coming off of course, the big decision there that they decided not to raise rates. And we were kind of left in a bit of a quandary as to, what kind of whither do we go now here from a volatility VIX perspective? Is it going to start to come off? It didn't seem like it. The vol was still hovering in last week. The term structure was still relatively elevated out there in the VIX futures and other products. And come into this week, kind of a similar ball game. We still are, of course, north of the 20 handle. In fact, your good buddy, in fact, Mark's man crush, frequent guest here on the program, Russell Rhodes, over there at the VIX, or at the SPX, also at the VIX, bit of a Freudian slip there. SIBO, quite a VIX house these days. He tweeted out some great data, as he is wont to do, about, of course, this is from yesterday, so when it closed above 20 yesterday, that was the 24th consecutive day that the VIX cash had closed above 20. So that ties it for number 20, the 20th spot on the overall list. And he tweeted out pretty much a number of 33 other days and sites of times throughout the history where the VIX has closed above 20 and how long that stretch was. Some of these pretty extensive. Mark, I'm sure you're polluted. You've seen this already, so you follow, of course, Russell on Twitter. So I won't ask you to guess because you've been polluted here. But there are some interesting dates. Listeners, I encourage you, if you're listening at home, whatever you do when you listen into the show, if you're driving, working out, working, whatever the case may be, see if you can conjure in your mind what you think are some of the stretches where the VIX would have been extremely elevated for a substantial period of time. If you want to see the whole list I encourage you go find Russell on Twitter. He is at Russell Rhodes, RHOADS. So you can follow him there, or maybe we'll post a link to it on the Options Insider when we post this. I'll just grace you guys with the top 10. Like I said, we are currently at number 20 with about 24 days over. Actually, we can just run up through the top 20 really quickly. We are 24 days above 20, and of course, today is going to be over 20 as well, so we'll be higher up on the list. Number 19, the period, these are the ending dates for these periods, listeners. So this is when they came to an end, was January 13th of 2000 with 28 days. 19th spot was, remember, VIX, the new VIX didn't exist back then, but the methodology can be replicated back to these. That's how they get some of these older dates into some of the VIX data here. 1990, February 14th, Valentine's Day, 1990, ended nearly a 30-day streak, 29 days. March 2000, March 2nd of 2000, 32 days. Dees 20th, 2007, 35 days, a rocking and rolling period. The number 15 spot was September 20th. Of 2007 with 40 days, of course, 2007, an interesting time as well. All the way back to October 9th of 1997. I was out in the S for that, and that was about 44 days of extended above 20 volatility. And of course, back to, you can probably guess, 2008, 2009, going to figure into this list in some way, shape, or form. And here's our first get here at number 13 with 49 days above 20, ending at October 14th. 2008. Number 12 is February 11th of 1998 with 76 days above 20. So extended periods. This puts the volatility in perspective when the media is always writing, VIX is low, VIX is high. This kind of data really puts that kind of stuff in perspective. Number 11, June 28th, 2000 with 81 days. April 24th, 2008. Now we're in the top 10 here, listeners, with 82 days. Followed number 9, November 17th, 1999. With 86 days. That was an interesting period. I was actually looking for more time frames in that 2000 realm. If you were around in that time frame, listeners, and trading on the floor, that latter portion of 2000 was a very volatile period with, of course, all of the election furor. Will they, won't they? Who's the next president? That was about a month or so of some pretty extended vol, but apparently didn't make the list. I said November 17th, 1999, 86 days. Number 9, October 8th, 2010, with 113 days above 20 in the VIX. Number 7, Jan 18th, 2012, with 122 days. Number 6, February 28th, 2002, 124 days. February 14th, going way back, 1991, for the number 5 spot, 145 days. Above 20. That's a substantial run of what would be certainly termed elevated vol these days. June 4th, 2001, pre 9/11, with 170 days elevated. Of course, a lot happening in that 2001 meltdown from the dot-com bust. May 2003, May 8th, 2003, the number 3 spot, 236 days. And the top 2, June 30th, 1999, with 239 days. And surprise, surprise, the number 1 longest stretch with the VIX elevated above 20 came to an end December 21st, 2009, with nearly a year. The year that was rocking and rolling, 2008 to 2009, 331 days above 20. Quite the list, Mr. Sebastian. Anything that surprised you, Ani? Anything that was included that surprised you, or perhaps, like me, maybe some omissions that surprised you as well?
All those dates make some sense. I know that one of the things that's always interesting to me is that we were backward for longer in 2011 than we were in 2008. And even though the VIX got so much higher in terms of consecutive days, even though the VIX got so much higher in 2008. So, the two, while a high VIX and backwardation are linked, they're not necessarily tied at the hip, which is kind of interesting.
Yeah, 2011, kind of almost the forgotten period of volatility there. Everyone remembers 08, 09, and latter 07 kind of causing, everyone remembers, 2001 and 2000 with the melt-offs and, of course, the other unfortunate events of 2001. A lot of periods in there that people remember. Some of the other ones perhaps slipping the memory, but the data is there to remind us. You mentioned, of course, backward, looking at the VIX futures right now. They still are a firm bid to the front portion and decent bid to the longer portions as well. Like you mentioned, VIX cash hovering right around the 22 level, front month future right around 21.40, 21.5 or so. It seems like the point of inflection out there, as it has been for a while, is kind of the Jan contract. That Jan, of course, right around just flirting with the 21 level out there, and that's when the bid starts to catch up. We've talked before. We had, of course, the Typhon guys out here as well who spend all day studying that term structure. That's kind of their trade du jour. It still is wonky. I think you can use that term, but perhaps not as head scratching as it was out there as well. Anything catching your eye out there in VIX futures land this week, Mark? And is the term structure behaving perhaps as you thought, or is it still making you scratch your head?
It's still, it's still backward, but it's tightened up significantly today relative to where it was, midweek, and actually yesterday morning. Yesterday morning, the VIX got over 25. Now it's back to kind of 21. The market is still in kind of this weird no man's land. So the VIX is still saying, "Hey, yellow light here. It's not time to go long and strong," but it is giving us but it is telling us, hey, there's some stuff going on.
Yeah, you certainly can't look at that term structure and say, woo, wipe your forehead, the worst is over. It certainly does show that there is still some lingering uncertainty, as there should be. There still is, despite Yellen's somewhat more strident comments yesterday, still is uncertainty what the hell the Fed's actually going to do when they're going to do it. Of course, earnings coming up, a lot of other shoes left to drop, still unfolding interesting things overseas and in the commodity realm. So there still is a lot of uncertainty that would lead to perhaps a bit of elevation. It didn't really lead to a ton, looking at the options now, ton of volume, lighten it up, particularly in the earlier portion of the week. Started to get a little bit more robust, a little bit heavier as the week wore on. We tended to see a bit of a drift into some of the call buying, a lot of upside, pretty much in the 20 handle across the board. ACH and NOV seem to be kind of the trade du jour, signaling again, perhaps kind of reinforcing what we were just talking about there, Mark, that there perhaps is still some lingering uncertainty about our levels here, our valuation, but what's going to happen going forward. We saw a lot of that, going out throughout most of the summer, just loving upside calls in all the months, May, June, July. Seeing some of that again this latter portion of this week. A lot of strikes in the 20 handles were really popular. Some weird choices as well. I think I saw a vertical going up, but pretty sizable. I think at least 30,000 contracts. So it was a DEES 2035 vertical. Interesting choice there, I would think, Mark. I think you would concur with that. Not a lot of incentive, really, probably to sell the 35. I don't know what you're really getting for that. I have to pull it up. Maybe just leave that open and you do something else. Would you leg into that wide of a vertical out in VIX land?
I mean, I don't know why. I think that you're not getting the true curvature that you should be wanting, right? I mean, get something a little meatier and you'll be much happier. That's something I do know.
Yeah, that's beyond the point of inflection, the point of the zealots really starting to bid it up. 2025 I could see, number 23, 27, something like that I could see. 2035, a wee bit, at that point you're kind of you're spinning your wheels for naught. Keep it open, let the dice fly high at that point. Of course, hope Don Schlesinger isn't listening, because I just advocated for buying naked premium. That sure will make him quite angry. Excuse me. Moving on, of course, I mentioned it wasn't the most robust time out there from a volume perspective, and we have been rocking and rolling over recent weeks, but still overall volume not exploding over recent times. Looking at overall option volume, probably right around the actually 50th percentile out there in VIX right now, so kind of hovering right around the average there. So not still kind of waiting, I think, for some other stuff to drop, and that of course is the same. And no matter how you break it down, the put wing or the call wing, right around that 50th percentile level. Overall open interest a little bit stronger, about the 70th percentile. Again, some of that having come off recently, starting to repopulate. What is kind of interesting out there, of course, is we talk about VVIX a lot out here on the show, and just the vol out there in VIX, and it has been rocking and rolling of late. 30-day actual realized vol out there in the VIX itself. About 136, which is pretty high. You go back 60 days, you get all that good fluff because remember that 30-day period doesn't count, the 24th and some of these other, and the week previous in August, which was really also very volatile. If you extend the time range to include that, you go out 60 days. Now you're in the 180%. You're in the 92nd percentile for realized vol out there from a VIX perspective. So that kind of puts it in some perspective. Looking at the strikes, people are actually trading this week, where people are lighting it up. A lot of Nove kind of topping the charts this week, with the Nove 26s and 20s coming in number one and number two, about 240,000 open on those strikes each, respectively. A couple contracts here or there, and not much difference. And it drops off a bit to about 189,000 for the OCC 30s. Again, a lot of call love this week. 181,000 for the OCC 20s, number 4. Got to go all the way down to number 5 to find a put anyone had any love for. In this case, it was the OCC 20 put, 180,000. That's pretty decent volume open interest for puts. There was a little bit of put action this week out there, which is also something of note. We don't see that quite often out there in VIX land, as long-term listeners of the program know. Then he's flowed on down 177,000 OCC 22s, OCC 14 puts. Again, another put on the list, number 7, lighting it up. And the rest are all calls, OCC 35s, 30s, and 25s for 173 and 67,000 respectively for pretty much all three of those there. So overall open interest, like I said, about 7.25 million, a little heavier on the calls and the puts, but perhaps not as much out there in terms of size, volume, lighten up the open interest. Mark, we just ran through a couple of interesting things, including that relatively, I think, head-scratching vertical that someone put on out there. Any other activity, any other trades out there in VIX options land really catch your interest or pique your curiosity this week, or perhaps the folks over there in your pit chat?
I'm seeing a lot of there was actually some big premium sellers. They're starting to take the vol down a little bit, the VVIX. And we were actually seeing some put buyers, and in a real. I feel like some of the big orders are for puts right now, and so I do think there are some people that are kind of dipping their toe in the Nove-Dees time frame that this could end.
Yeah, well, that was reflected, of course, in the hot strikes lighting it up this week with, I can't remember the last time we saw 2 put strikes in the top 10 on that list. It's been quite a while. Usually maybe a put could grace the number 10 spot, and that's about it. But a put in the top 5 is also of merit, again, kind of backing it up, that people actually coming out and picking up some puts. So we got all sorts of fun diversity of opinions, selling the 35s on that vertical, buying the puts, whatever floats your boat out there in VIX land. Speaking of floating boats, we like to look a little bit beyond our shores every now and then as well. And there's been a lot of attempts to license and replicate VIX around the world. Not all of them really generating some traction. The one place where it actually does is over there in India. We talked about India VIX and Nifty VIX over there quite a few times here on the old program. And it's been, like you might imagine, seeing here domestically, a lot of rocking and rolling. You're seeing that reflected over there in India as well. They had their biggest, looking at people like we did with VIX here domestically, people like to break these things down in historical metrics. And, of course, India, the Nifty VIX, having its biggest weekly advance in about a month over there, coming in on Thursday. And, of course, it's hovering pretty close here, actually, to the VIX cash level, right around the 21 level, rallying percent to percent, cover your ears, Mark, about 14%. And, of course, the week before, took it on the chin, down about 30% almost, which was their biggest decline in well over a year out there. So things rocking and rolling over there in India as well. We can also turn our attention, Mark, I know this has been catching your eye a lot this week. I haven't talked about this one on the show in a while. It hasn't really merited it. We did that one spot I mentioned recently with that hit we did on our other program, the long and short of futures options, with the Economist having some surprisingly timely and insightful looks at gold option implied volatility. Haven't really talked about gold much other than that. It's been really all crude all the time on the commodity front. Well, gold kind of back on the radar this week. A lot of rocking and rolling out there. It was up 20 handles just the other day in the big futures, of course, 2+ handles in good old GLD. And GLD, like I said, rocking and rolling quite a bit out there, hovering right around the 60 percentile right now, in actually 80 percentile in their implied vol range, right around over 100%, 104 almost out there in GLD, respectively out there. And looking at Looking at the historical again, if you widen it out to include that full time frame that includes August, again, you're talking rocking and rolling times, realized vol approaching near record levels, 92%, 92nd percentile again out there in that area. So interesting stuff afoot. Mark, I know, like I was saying, you guys have been watching a lot of particularly GLD. I know that's your preferred avenue for the shiny metals. You were looking at some interesting spreads out there. Anything end up lining up for you guys, and what in particular really is catching your eye out there in GLD this week?
We were looking at the September 30. The volatility was just too cheap, and that's starting to pay off. I'm surprised GLD isn't down more, but that looks like a one that especially with the Fed being a little extra hawkish, that could be that could get buried here over the next couple of days if if the Fed maintains this hawkish tone, surprisingly hawkish tone. And so I was surprised when it was up as big as it was yesterday, and I'm a little more surprised that it's not down way more.
Yeah, substantial rally yesterday. Like I said, over 2 handles out there in GLD, and a lot more, obviously 20-odd handles in the big futures options. Not so much of a sell-off today, about 70 cents out there in good old GLD. So you're right, Mark, perhaps a little bit surprising that they didn't give back more of yesterday's gains. And as I recall, you were looking at, I think it was some near-term vol out there, and thinking that some of that might be a little bit underpriced and perhaps attractive out there.
Yeah, those were underpriced. The gamma seemed cheap. The other place where, and I know we haven't gotten to bonds, but that I think is even more interesting is to look at bond vol and VXTYN and VXTLT, because that bond vol is surprisingly inexpensive for kind of where we are right now.
Let's get into that a little bit then, because I was going to save it for later, but we can get into that. Of course, VXTYN being one of the there's many different metrics, many different products you can look at for your bond vol. We've talked a bit on the show, still kind of waiting for TY VIX to really provide some very, very interesting, meaningful data. I'm not sure if you've been sinking your teeth into that one of late, Mark. I keep an eye on it, but it hasn't really not much floated to the surface of late, worthy of note. Of course, you're right. VXTYN also rocking and rolling these days. So why don't let's just dive right into that now. What caught your eye out there, particularly in like VXTYN, and also if you've noticed anything of note in TY VIX, let our listeners know.
The big piece is that I think volatility is too low in bonds. I was looking at TLT in particular, and right now there's almost no volatility premium associated with the October 30 strike. Now, what makes that so interesting is that the Federal Reserve meets the 27th and 28th, and so I can really put on a time spread long the OCC 30s, short the OCC 2s for a volatility credit, which was a pretty big surprise to me. Yes, we do have non-farms, but then if I look at kind of the greater chart, the fact that there's no volatility premium being priced into those options ahead of that meeting is somewhat shocking to me. And I can't imagine that there won't end up being some sort of bid up in bond options right behind that Fed meeting, because she really only has 2 more chances to raise rates, and there will be some percentage odds of a rate hike priced in October, maybe 15%, but it'll be there.
Yeah, it's one of those things that seems like a relative certainty, like we always say about buying longer-term puts on VXX. Kind of a relative certainty. It seems like October will also be a time frame of some relative vol, particularly given her comments yesterday. She's not going quietly into the night as a lot of people would hope for the rest of the year. They're planting their flag firmly on doing something this year. So if you're in that camp, then perhaps that OCC time frame may look a little bit underpriced to you as well. Not perhaps as underpriced as all that crude vol that Goldman keeps telling us to keep buying out there. Not to twist that dagger one more time, but it's just too tempting. Of course, crude vol was kind of all over the place this week, kind of spiking, kind of selling off, hovering around that 50 handle out there in OVX and OIV for a lot of what we saw this week, and then coming off towards the latter portion of the week, hovering right around the 48 level right now. We seem to have found a decent range out there from a vol perspective right now. Mark, seems that things seem kind of have a little bit range bound in the underlying, a little bit range bound out in the vol perspective as well. I don't know. You seen anything interesting out there that's pointing to you? Like it is to the Goldman folks that were due for a massive move in either direction, or you think we're going to be kind of range bound for the foreseeable future?
I think we're range bound for a while.
So you're not buying in on those whatever they were talking, no 40 puts or whatever they were talking up last time.
Yeah.
Yeah, not so much on the buy-in of vol out there in crude. I give them points for. I think we mentioned last time they got to the point of. I think advocating a sell-off down to the 20 handle at one point, which is you give them points for trying and for backing up their predictions. But so far, at least, despite their best efforts, a lot of their more dire predictions not coming to pass. That doesn't mean we don't have time for your dire predictions, your dire questions, your dire comments. We love to hear from you guys. We try to squeeze in as many as we can, so we'll try to squeeze in some this week as well. So without further ado, let's dive right on into the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, like the man said, this is the portion of the show where you guys get to join us here with your questions, your comments, trying to squeeze in a few more this week because so many people writing in and people get mad when you don't read their questions. So we try to get to as many as we can. Starting off with a couple of our most frequent questioners, commenters, Mark B. and Fred. Seems like a lot of love these days, Mark, for iron flies. They're all the rage, which kind of speaks near and dear to my heart because that's one of my favorite strategies. I've always preferred the fly to the condor. We all know the iron condor is an iron fly for cowards. So we have first one from Fred says, hey, if the Fed, this is obviously from last week, didn't have time to get to it. If the Fed raises, are there option strategies to capture vol for this situation? Are the iron fly or iron condor good if you expect a Fed increase? That was interesting timing, of course. We didn't really see vol play out perhaps the way anyone expected coming on the heels of the Fed announcement or perhaps lack thereof last week. So that would have been an interesting play. We didn't perhaps see the vol crush a lot of people expected or any of the kind of dramatic vol movement that a lot of people really expected. So you don't mention which way you were leaning. If you were looking to, you say capture, so I'm assuming maybe long premium in that sense, and that wouldn't have worked out as bad as you probably would have hoped, but it wouldn't have been the best trade either. Also here, adding on the iron fly train is Mark Beast talking about VXX front week iron butterflies. Came in aggressively. This is the comment. I guess he's trading some of these. He says he calls it a hedged short straddle. Okay. And he's talking about enjoyed a presentation on one of our other programs about iron flies. Thanks for the shows, guys. So yeah, Mark, iron flies apparently the hot strategy du jour, whether you're doing them in the mothership VIX ahead of the Fed or after the Fed, or perhaps even out in your favorite predictably crappy product, VXX. What's your take on, are you an iron fly guy in general? I think you're more of like a broken wing kind of fly, if I recall. And B, some of the use cases they're outlining here for the flies.
Yeah, I mean, there's all sorts of different ways to trade it. And, you clearly at the time would have thought volatility was going to come in. It did not. But one of the interesting pieces is that we really didn't move that much. We were down 30 and we moved some. So, one of the things you maybe would have done is to actually take advantage of skew and invert the fly where you're long the straddle and short the wings, where with the idea that with the Fed announcement out, volatility skew and volatility at the edges would come in. And typically on a decision like that, we are going to move one way or the other. So it could have been a cheap way to capture a straddle. Long iron flies are plays that I really do like when skew is just kind of out of whack. Another reason why I like broken wing butterflies is when skew's out of whack. If you were kind of really wanting to capture volatility premium through an iron fly, I might have done that more in a product like VIX rather than VXX, and try to do something directionally, maybe move around the wings a little bit. I don't know that an at-the-money play would have been the right play. It probably is a loser as I look at it.
Yeah, it's kind of a weird one because, looking at, there was no demonstrable, like I said, demonstrable movement either way. You didn't get the big crush if you came in short. You didn't get the any big pop, obviously, if you came in long. But you didn't really lose as much as you might have feared either. I tend to think, yeah, you're right. The skew portion may have been really the only place really to demonstrably profit from an iron fly perspective. There are obviously other trades out there you could have done, but yeah, not the ideal week for it. And we kind of mentioned that if you listen to the show, coming out of even the week before, that would have been 2 weeks ago now, going into the Fed announcements, that we were kind of unsure what was going to happen. There were a lot of indicators that vol could indeed stay perhaps somewhat bid up even after the Fed announcement, because there's so many other things lurking out there, things like the VIX term structure and others, kind of showing that there was other shoes waiting to drop. And so we weren't really advocating for a huge vol crush. I mean, it could have happened, obviously, but we were kind of uncertain about that as well. So hopefully you guys listened to that and perhaps saved yourself a little bit of cash, because it kind of turned out that way, a little bit to head scratching, and clearly still some vol evident out there. The Yellen premium still alive and well out there from a vol perspective. We got a comment coming here, Mark, all the way from the Ukraine. Got some love from the Ukraine. If I butcher your name, I sincerely apologize. I'm going to give my best shot at it. Miroslav K, let's just call him. He writes, obviously English not his first language, so ease up on the grammar there, listeners. Don't give him a hard time. Hello, me and my friends really like your radio. Well, thank you, Miroslav. We listen with great pleasure. Thank you for your good and quality programs. Keep up the great work. I want to receive a gift from you, souvenirs with your logo for memories. Good luck and prosperity, your fan. He proceeds to list a very lengthy Ukraine address. Thanks for the love. We love the show. We appreciate you guys writing in, and we hope you guys write in with questions, stuff like that too. But we love the love too. We'll take it. I know Mark eats it up. But unfortunately, we tend not to ship a lot of stuff overseas, as all the hurdles you might imagine with shipping stuff, particularly now to the Ukraine, maybe a little bit challenging. I hate to do that to you guys, because I would love to just deck out the entire world in options insider gear. I know some of our U.S. fans are wearing just that, so including some of our earlier ones who just wrote in. So I feel bad excluding the international ones, but yeah, it's something we just kind of limit it to domestic. That said, who knows? Maybe Mark has a tchotchke or perhaps a something on Option Pit he can offer you. Anything you can offer our friend here from the Ukraine? Maybe a virtual good, Mark?
I could send him all sorts of. Yes, I'll shoot me his email. I'll send him a prize.
There you go. Mark's got you covered, because he's got more virtual goods than we do. I mean, we put all of our virtual goods out there for free already, so you're getting all of them. So maybe Mark's got something. Discount on a webinar, recording of a webinar, something like that might be kind of cool. Maybe just a signed headshot. Everyone loves that, right, Mark?
It's sure, or I could send him.
I know you got him lying around the office.
I've got a really good ebook I could send him, or I could send him some, some different stuff like that.
There you go, an ebook. Well done. See, so we got you covered, Miroslav, even if we can't ship a lot of physical goods overseas. Keep the love coming. We love to hear it. It feeds Mark's ego, if nothing else. All right, moving on to some other actual questions. This one comes in, I believe, from MM21. He writes, hey, is there a simple calculator or quick tip for determining how much of an options price is the implied vol? I'd say short answer to that question, you might want to take one of Mark's options boot camps, options webinars. I'm sure they break down a lot of things like intrinsic versus extrinsic value and all that stuff. But there are, thankfully for you, some shorthand tips. First off, depends on what broker you use. Most of them, if you highlight your options, a good option-oriented broker, they're going to break down all that stuff for you. Your things like your Greeks, your Delta, Gamma, Theta, Vega. Vega obviously showing your options sensitivity to vol, so that'll give you a good example of how much your thing's going to move. But if you're looking at shorthand, you're just flying around through some options chains, and you want to kind of get a quick sense for how much of an options value is kind of fluff. There are a couple of shorthand ways to do it. Obviously, you can, if you're an in-the-money option, you can look at the other strike, the out-of-the-money option, see the value of that. That's all essentially what we call extrinsic value. We won't get into put call parity and all that kind of fun stuff here. That's for another show, another time. But essentially, you can see that's going to imply a certain value there, and all that value on the out-of-the-money strike is going to be essentially volatility. It's going to be the time premium, cost of carry. Right now, cost of carry pretty nominal unless you're talking some far off, deep in the money contract, something like that. So you can pretty much lump the lion's share of that value up to volatility. So that can give you a quick look right there. So, let's say you got a option trading, $5.50. It's intrinsically worth $5 because it's, a 45 call and it's a stock's trading 50. That 50 cents is the extra. That's the fluff. That can go away. All other things being considered, from volatility going away, from going close to expiration, time, cost of carry, all that fun stuff. So right away, 50 cents, 10% of that option roughly could be is the volatility fluff, the juice. Mark, anything you want to add aside from a quick plug for your various webinars and boot camps?
Yeah, no, this is called option synthetics, and it's how everything is intertwined. And if you don't understand what extrinsic from intrinsic, you need to understand option synthetics. And I used to joke that option synthetics are a lot like duct tape. It holds everything together. And
that's why he doesn't do stand-up comedy, ladies and gentlemen.
Hey, you know what? I'm hilarious. All right.
Says your wife.
Says no, she doesn't. But that's the key. Is this really comes down to option synthetics, and you need to learn them. And if you don't know your synthetics, you're not going to understand any of this. So just give yourself a big Google on put call parity and option synthetics, and a lot of this will make a lot more sense to you.
Well done, and well done for following along for the show as long as you have. It must be somewhat a little bit intimidating for you if some of these basic concepts you're still unclear on. But that's a good. We welcome listeners of all stripes, all shapes and sizes here on the program. Basic, intermediate, pro, variant, swap trader, wherever you break down on the spectrum. We love you all. We know we got a bunch of all of you floating around in and of there. Another one coming in. Don't have this listener's name. Says, hey, Mark, hopefully this person is listening recently because we've been talking just about this. Mark, are there any divergences of note lately between small cap volatility and large cap volatility these days? Well, yeah, if you listened to last week's show and the week before, maybe you've been traveling. Maybe you missed those. We talked about exactly that. And it was a relatively rare divergence. We do this show in partnership with Russell. We talk about RVX, which is their Russell VIX or Russell Volatility product. The reason they launched that is because inherently, structurally, if you look at small caps versus large caps, small caps are structurally going to be more volatile. So it should be a very attractive product from a volatility standpoint. As we said many times on the show, it's an interesting index that, for a lot of reasons behind the scenes and others, it hasn't attracted a lot of volume yet, but they're doing a lot of things to try to replicate that and also launch some new products that I know are in the works over there that are going to be pretty interesting in the near future to drive some volume. But we did, and traditionally RVX has always traded as a premium to VIX cash for the reasons we just laid out. We saw that diverge for the first time. I think it was about a week and a half ago now, Mark, where RVX actually dipped below VIX. It was a very brief period. It was about a session or two before they righted themselves, but they were hovering pretty close for a while. They're still relatively close now. VIX cash hovering right around 22, RVX about 23.5 or so. So it's not like they're 35 and 10. They're still pretty much in the ballpark of each other. So that was the more interesting, probably the most interesting divergence of late. And Mark, I think we speculated on the show that may have something to do with kind of just the different systemic risks that these firms are facing now. Most of the small caps being primarily domestic, not as impacted by issues like the dollar and China and other things like that, whereas a lot of the multinationals, of course, being impacted by those overseas issues. So that can add a different layer of risk than they had before, make them actually more volatile than small caps. So it is an interesting area. If you're watching this, then perhaps might want to watch for that divergence to occur again. Mark, anything catching your eye out there from a RVX versus VIX, or just IWM small cap versus large cap vol perspective these days?
Hey, if they want to let them get out of whack, you got to take your stabs at it. It's really interesting to see, that, when those things get out of whack, there's almost always an option. There's almost always a chance to get in there and really arb between the two, because those relationships don't last for very long typically, and there's the mean reversion ends up being an important piece.
I think we've got time for one more here, trying to burn through the mailbox as much as we can. We got so many interesting ones coming in. This one, another one falling on the more basic side of the spectrum. We could probably spend 2 hours on this question. We obviously won't, listeners. This comes in from Nan State. He or she writes, "Hey, what is driving the VIX on days when it appears to move contrary to its normal direction? I'm looking at days when both VIX and the market rally, or when VIX seems to move independently of the S&P 500. Are these just outliers, or is there something else at work? Cool show, cool network. P.S." Everyone's on the logo train this week. Can I get a shirt like some of these other guys who are rocking your gear? Well, Nan State, I don't think you sent your address, so we might need that first. And then we'll have to see if your question merits it. Usually we reserve them for really good questions, or people who write in a lot with really great questions, and they get to rock some of the exclusive options insider gear that only our staff and a select few others, including many of the heads of state of this industry, rock on a regular basis. I think some of the option pit guys may have one or two over there as well. As in terms of the earlier part, what drives the VIX on the days when it moves kind of its own mind, well, I think that could be the entirety of this show in 4 years. That we have discussed that many different times. There's a lot that goes into that. Where can we start? ETPs pulling it different ways. The context of where the S&P currently is, the skew, all these things play into that. Mark, we don't really have time to answer all these things. What's your quick 30-second synopsis here for our friend Nancy, who wants the answers to all things VIX in about a minute?
Really? In a minute? I don't think that's quite possible.
Okay, 30 seconds. You can do it.
You know what? I've got a good YouTube video. I've got a couple of decent YouTube videos on VIX. You can go to the Option Pit. You go to the Option Pit YouTube page and just search, VIX and Option Pit, and that'll give you a good hour-long delve into all things VIX.
An hour long? Wow. I never knew you liked to talk. Surprising.
Oh, yeah. Pot kettle.
Yes. Well, I do get paid for it, which is nice. Good question, Nan. Stay a little broad. I think hitting some of those videos is a good place to start, or of course surf on over to our site or a lot of the other free sites out there, CBO and others. They have a lot of good data on exactly this stuff, or you search for VIX and studies. You'll get all these studies on what happens, why it diverges. Typically, it does have that negative inverse correlation somewhere around, I think about a 0.7 or 0.8, somewhere in that range. But there is obviously that 0.2 to 0.3 portion where it does its own thing. And a lot of things go into that heady brew when it does that. And so I think a little bit of Google foo, as Mark suggested, may be in your future. But we love it. Keep them up. Keep the questions coming, Nan State. Maybe you too can qualify for some cool options insider gear. That's all the time we have for the Vol voicemail this episode, listeners. Now we're going to keep on rolling into that ever-challenging, ever-perplexing portion of the show, the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. This is the portion of the show that, like I said, has been some of the more challenging of the last month or so, kind of prognosticating what the volatility gods hold in store. As if you've been watching the markets, they're kind of capricious these days. They kind of tend to do what they want, when they want, and regardless of anything else. Mark, we don't have a guest, so we don't have anyone else to play guess the vol with you. So I'll play today just for fun, and I'll take the guest chair today. And you're right, it is this kind where we prognosticated several times on recent shows, what's going to cause it to dip. We thought maybe the Fed would do it. Didn't really happen. Some of the other events we saw coming up didn't really happen. We thought maybe, coming off the heels of the Fed's additional comments last night, we would finally get some of this coming off. And we did see that a little bit. Now you got crazy step down from the speaker. It seems like events are conspiring to keep us around this mid to low 20s level out here in the VIX cash perspective. The term structure of things like VIX futures certainly not predicting any sort of massive drops. Some of the put buying notwithstanding out there. I guess if you look at that heavily, maybe you could lean south. So I'm I'm going to go out on a limb and say we're going to be slightly lower, but nothing crazy, like hovering around or maybe the 21 handle out there in VIX cash links. I think this time next week things are going to look very similar, and it's going to be still kind of an open question as to what the hell is going to be driving vol this time, and maybe who knows, maybe some other random resignations from the government will keep, or maybe this Boehner thing is going to break up into something crazy. Who knows? But I think we're going to be a little bit lower. Are you somewhere around there? You're going to say VIX 15? You're going to go with our vertical friend VIX 35? Where are you going?
I don't think it's going to 35, but I would be unshocked if it was a little bit higher. There's still a lot of uncertainty, even with kind of this kind of taken out. Volatility is remaining somewhat high. That being said, I would not be surprised to see the VIX below 20 by next Friday either. I mean, at this point, I don't think we're going to be right here. I think we're either below 20 or back above 24.
There you go. So can't stay at the bar. Got to go somewhere.
I would buy so I would be interested.
Just going to say, it looks like you might be loading up on some VIX premium. I might be
interested VIX 22 straddle buy, except it's $5. Yeah, so that might be a butterfly I would do. What I would do.
There you go.
Here's my trade.
It's like you watched your own webinar or something.
I did. I would buy the OCK 22 straddle for $5.20, and then I would sell the 17 puts at 40, and the 25 calls at 50 cents. So I'd collect $1.90 there.
There you go, listeners. See, that's how we break down trades too. Sometimes we look at strikes and be like, oh, it's a little bit rich. What can we do to mitigate that somewhat? And the trade unfolds from there. So it's not always this great pre-planned thing. You kind of just go with the flow, which makes it kind of fun. And we have to go away at the end of this segment, unfortunately, listeners. All the time we have for the Around the Blocks. Excuse me, wrong show. For the Crystal Ball segment. Also for this episode of Volatility Views. But before we go, as always, let me check back in with the Greasy Meatball while he's pricing up his fly here and see what he has cooking. Sounds like a lot of you out there in the audience maybe could check out some of these webinars Mark's doing. The boot camps, you just did the big vol webinar. It might be helpful with some of our listeners, Mark. So why don't you go ahead and tell our listeners what you have coming up that may interest them.
Well, let me correct my butterfly. I would do 530 versus the 1925, which is 260. So I'd pay about 270 for that fly. Yeah, we got the boot camp coming up next Wednesday. It starts. You go to optionpit.com/bootcamp. We're going to cover all sorts of stuff. We're going to cover VIX and VIX ETPs, the Greeks, probably some stuff on synthetics, some long-term strategies, short-term strategies. It's a good 9 hours of education over a 3-day period. You're going to learn a ton, and for $247, not a bad deal.
There you go, listener. Surf on over. If an hour a mark every week here on this show is not enough for you, then go get your 9 hours. A lot of good info baked into that boot camp. Who knows? Maybe some other fun goodies baked in there as well. Optionpit.com to learn more. And on behalf of the greasiest of greasy meatballs and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, sending in such great comments and questions and requests for free stuff. We love all of them. And we'll see you next time right here on Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. Or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.